Hello, everyone. Good afternoon, high noon, top of the noon hour to you. I am Roz B, Rosalind Booker. Ask Roz B. I'm the principal broker, CEO of Arbrook Realty, and the director of Arbrook Cares. It's a 501c3 where we help renters become homeowners by being a community resource and partner to educate, elevate, and empower. And we are here for our second Tuesday and fourth Tuesday NAREB live event, whereby we are what? Creating pathways to home ownership.
Home ownership.
Yay! Yes, I hope y'all gotta have that memorized.
Yay!
So I have some awesome team members, guests, board members with me that do life with us together, and we just do this collaboratively. Oh, I just made up a word.
That's all
Um,
right. It's a good word.
Same thing. I know it sounded good. And so I am going to punt it to Miss Rhonda to introduce herself, and then Chris.
Okay. Hello, everyone. My name is Rhonda Hutchison. I'm a residential mortgage lender with Paramount Residential Mortgage Group, and I am known as the Lone Lioness. And I'm also a board member of the National Association of Real Estate Brokers North Texas Division under the leadership of Miss Laura Washington. Oh my goodness, I know we got a lot of things going on that we're really anxious to share. But if you have any questions later after the broadcast or at any time, if you have any questions about lending, anything about financing, how's the market, is it best for me to go ahead and make that move now? Or maybe I need to wait a little bit. I'm not going to suggest that you do, but give me a call at 214-856-3747. And that's 214-856-3747. Mr. Chris? You muted, Chris.
Just trying to make sure y'all paying attention to me. That's it.
Well, we passed that test, didn't we?
I'm Chris Ziegler with the Ziegler Agency Allstate, located in Frisco, Texas, serving the DFW Metroplex and the whole state of Texas. And I'm happy to be on the show with these lovely ladies again, once again with a dynamic topic today. And sometimes the old is new. We're talking about updates because there's been a lot of changes here within, they say, months, in the last few weeks, a few days. So we're excited and eager to talk about those updates. And once again, my motto is customer service with a personal touch. And I can be reached at 214-870-4269 to take care of all your insurance needs, whether it's home,
Every last one.
commercial,
Every last one.
Everyone,
no, last one. URY.
everyone. Yes. While you at it, Chris, can you go ahead and open us up in prayer?
Yes, most definitely.
Okay.
Let's bow our heads. Heavenly Father, we first and foremost thank you for letting us be in your presence. We thank you for all the many blessings you bestow upon us on a day-to-day basis, Father. Help us to be intentional in everything we do to serve your kingdom. And we just ask you, dear God, to watch over everyone who's listening to this call and anyone who, dear God, who needs intervention in home ownership and just giving knowledge in everything they do on a day-to-day basis. We ask that you intercede now. We ask that you watch over our family, our friends, and even people who don't know, dear God, to let them know who you are, the true and only God, through your Son, Jesus Christ. These are the best ways. In your Son's name we pray. Amen.
Amen.
Amen. So all roads, all things lead to real estate, insurance, mortgage, credit, etc. So we're going to be talking about today market news and updates. Like Chris said, I mean, not just what's happened in the last 12 months, not 6 months, but let's just say the last 90 days. I mean, things are ever changing. And, we were trying to come up with something really savvy to talk about. And it's like, well, let's educate people on what's happening right now, because there's a lot of indecision about, home buyers, whether they should buy, whether they should sell, whether they should refinance. Do they need to look for a job? Do they need to add multiple streams? What should they do? Should they, cast off debt? What do people really need to be doing? And I will always say it's a personal decision, but thank God we're here to help you make that informed decision. So as a real estate professional of 26 years, I've seen the ups, the downs, and all the in-betweens, and I've been in that whirlwind myself. I will say it depends on the area that you are in terms of, the market here in DFW. But pretty much we're still in a seller's market, a market driven by the sellers. So there are still multiple offers. Even with the interest rate increases over the last 4 months, what we have seen, and we're going to talk about it a little bit more, we we are not. Can I just say this? Well, get calls and emails about this. Oh my God, is the market crashing? Are we here? Look, Texas, I always say, being a leader in job creation, we are just not that gal. We are not that guy. When I say that, we're not that entity, that region that's going to crash. That's my personal professional opinion. Why? Because there are still people who won't go to work. So there are still people hiring that won't go to work. And it's not like 2007 and 8 where people didn't have jobs and there was just way, 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 way too much inventory. No, with an estimate of 1,000 people moving here per day and they're cash strapped heavy that can pay cash for homes and they can't find homes. The homes that do go on the market, that's why we're still seeing the multiple offers. But let me show you and tell you what I have seen here in this last, I say 45 days. Prices are coming down. No, I did not say homes were below market. I said prices were coming down. That means sellers are being more realistic about their overinflated home price, their list price.
Kind of, sort
Kind of, sort of. You still have some that I don't care what you say, what proof you put in front of them as a listing agent, they're gonna still say, I want to price it 50,000, 100,000 more. But we are seeing some prices come down. So Rhonda, I want to punt it to you. What are you seeing in your industry, in the mortgage industry?
I'm piggybacking off of you, and I'm going to say you are correct in your assessment. I am seeing the prices of homes that are was priced up there, which was, well, like you say, over market or over
Yeah.
asking price, are now being able. Now the sellers are saying, okay, I have it's less. I want to say competition out there, but my pickings in the barrel is a little bit thinner. So
Yes.
yes, so let me be smart in my decision making of how I'm going to price my home. And so I
Mhm.
do see that. And also I see more contracts being accepted. Does that mean that now it's back to normal before the market started to turn? No. But I don't see the over asking prices like they were. And I am seeing more contracts being sent or being accepted. Now,
That's
let's talk
yes.
about that. But
Yeah.
the bars is still slim because of the interest rate being increased. The sales of homes are still up there, and the interest rate have kind of narrowed that gap of homeowners being able to qualify in the sales price realm that they would have, let's just say,
Mhm.
4 or 5 months
Mhm.
ago. So it's kind of even out. But you are correct. The sellers are loosening their bootstraps a little bit.
Yeah, they are. They are. I want to ask Chris, what is he seeing? Is anything synonymous with what we're saying, Chris? Are insurance rates going up with this interest rate going up?
well, rates start going up based on what you just talked about now because people are screaming and moaning. I'm a consumer like everybody else. Although I'm an Allstate insurance agent, I don't get any discounts that anybody else doesn't get. So I'm very cognizant of that myself as well because my wife, opened up the bill. She said, "What the heck is going on? Why is this stuff going up so high?" But one of the things that's causing that, we already have a situation where when it comes to the weather and things of that magnitude, like I tell you about the hailstorms and things of that nature that happen to make insurance rates go up. But now with the supply chain issues we're having now, is causing a lot of things with labor, supplies. Like you said, some of these home builders now are talking about, we talked about previously, about only doing one-story houses because it's a shortage of lumber. So when you have a shortage of lumber and things like that happening, it does affect us too. So when people have a problem where the hailstorm comes through or something happens to the house where weather-related situation, or they have a mishap or something to where something gets destroyed in their home. Now, to repair that home is costing more.
I
So
see.
a combination of all those things have been very, very problematic in this industry. And unfortunately, that's one of the things that happens from that standpoint.
Yeah, yeah. One of the other things that I'm seeing in the real estate industry is that more builders who had at one point become just as competitive as a one owner, meaning an owner selling their home. We were seeing 8 months ago lotteries in the new home construction. I mean, builders were a particular home would bust, the loan would bust and come back on the market. They were pitching that particular home out to the public, to consumers to actually put in their bid. So we're not seeing that anymore. I see more and more inventory from the builders come online and available. And I'm seeing for the first time, drum roll, I hope some realtors are listening. Come on, you got to get those relationships. Come on, take them some cookies, some chocolates every Friday. Get those relationships with those builders revved up because they're starting to give bonuses. They're starting to give realtor bonuses. And what I meant by that, because I don't want anybody to think that, hey, you can woo a builder. It's about building the
A
relationship.
relationship.
What I am saying is get back out there, start building those relationships with the builders again. Be top of mind because there are some bonuses for some builders that they are offering real estate professionals. So we haven't seen that in a while. So yes, the bands are loosening a bit.
hmm And what I've seen also in the new construction is that they're starting to offer those incentives as well. So, they
Yeah.
kind of took those sell builders credit away, but now they're offering those again to make sure that they like I say reel in those home buyers that they
Mhm.
otherwise may not be able to secure. So they are doing they're back to their old tactics. Let's just say
I
that.
I tell you, Rhonda, in terms of the interest rate increase, and we were talking earlier about how the Fed's intention was to get things leveled off again, try to bring some normalcy back. Like I said, we're seeing prices fall, not homes decrease in market. But on the other hand, since the moratoriums have gone away, and you can attest to this if they actually are, Rhonda, actually gone away. But we're starting to see on some of the auction sites and foreclosure sites more inventory come up. So I'm not saying that they're going to be, 50 cent, 40 cents on the dollar, but we are starting to see some of those homes turn up on the books and, go through the mill. So investors, time to get your cash ready if you're going to go for those type of deals.
Well, I guess what I see, and this is my thought process on it, is that the servicer is going to try and work with the homeowner as much as possible because
Good
they don't
point.
want that home back. I'm just going to let you know that they're having all kind of modification rules and changes. As you know, they brought back the 40-year
Mm,
modification where now you can actually change your 30-year into a 40-year to lower your payment and be able to structure your life and still keep your home, structure your finances and keep your home. So they never want that home back. So I think the service is going to do whatever they can to make sure that the homeowner does not lose. However, there may be circumstances where even a 40-year modification will work. If you're
mm,
completely out of work, or one person is just working and they own one and they can't sustain their household, so you're going to see those. But at the end of the day, the servicer is going to do whatever they can to work with the home buyer, the home owner, to make
yeah.
sure they don't lose that home. So whatever you're seeing is probably based on other circumstances that's beyond a modification.
Oh, that's a good point, Rhonda, because my next question to you is if we're seeing some of that inventory trickling in on, some of these auction sites, what could be the circumstance behind how it made it to chopping block, so to speak.
Yeah, yeah, and this is totally what I said is that there for some reason there's nothing that can be done. I mean, like
Gotcha.
all the check marks been checked.
Gotcha.
They just don't have the funds to or the money to keep the home. I mean, no matter what happens,
Mm,
and at that case, there's no other choice that the servicer, can do. They don't have a choice, but okay, we have
mhm.
to do what we call a foreclosure or short sale. But I'm sure that they work with that borrower or the homeowner with every avenue that they could before it end up going into a foreclosure or short sale.
Yeah, and I wanted to just share if there's anyone out here that's listening, or if you come back, listen to the replay, or share this video out, please understand that, I mean, really, foreclosure is the absolute last option.
Yeah, yeah,
I spoke to a client, was it a year and a half ago? And I hadn't talked to him in a while, but after learning that they had such a small balance and walked away from their home, like they left it because of their extreme circumstances, underemployed, unemployed, whatever the case. But I want you to know that a short sale is that option before foreclosure. I mean, if you can prove that your finances are upside down and you cannot afford to pay the mortgage, like Rhonda's mentioned, even after all of the offerings that they provide, get an approval from the mortgage lender, the servicer, the bank, to sell your home short of what you owe on it. At least it will not be a foreclosure on the credit. Yeah.
exactly, exactly.
Yeah.
And even before you come to that, I mean, if you already see yourself starting to decline in income or it's getting tough before you get to that point, and I know that the interest rates have risen, but it is best to do if you can do a refinance do a refinance, even if it's a rate reduction and actually not take any cash out, or take cash out if you have that equity to pay off all the bills that you have so that maybe the home is the only debt that you may have. Don't wait until you have lates where you have recent lates, but then because then you're kicking yourself out of the ball game, okay? So just make sure that when you see yourself being tight, let me go ahead, let me take this equity, let me get some cash out, or let me do what we call a rate reduction when we're just simply lowering your monthly payment.
Hey, Chris, on a refinance, when people are refinancing, how is their insurance affected? If they're in midterm of that policy, how does that work? Is it renewed automatically, extended for another year, or does it just pick up where it left off? How does that work?
I said it depends on which company you're working for, what mortgage company you're working for. Some of them are sticklers about when you're switching, they want you to switch it based on the time frame when they're actually picking it up, which most of them do. But every now and then you have some just say, hey, we'll pick it up from where it is. So it basically boils down to the mortgage company that you're dealing with. Some of them are sticklers about certain things. I mean, I've had some situations where they have Rhonda M. Hutchinson, and they have and I forget the M. They say, hey, you need to be on there. Some companies say it with the date sometimes too. They want to be the exact date. Some people say this within 5 days. So it boils down to the to the mortgage company you're dealing with. But with the renewals and refinancing, sometimes we got to make sure. Like I was having a situation right now where I had to get onto a mortgage company because the guy was getting ready to refinance, but I was having a hard time getting the check from the current company so they can show paid in full. Now I've been reaching out to this mortgage company for a while, and
Hmm.
this person's kind of at the let's say the 11th hour trying to get it done. So we're working hard and diligently to do that, and I'm gonna try to get them to overnight a check. So it just depends on who you're dealing with and everything. Everybody's not as good as Robin.
Yeah, that's right. That's right. And typically, the mortgage company just wants to make sure that it's covered.
Now
And
she
if
owes me a
you have,
lunch now.
yeah, it's not getting ready to expire. You're not past due behind on your insurance. They want to make sure you're up to date, you're covered, and
Uh-huh.
that's pretty much what they want to see. And of course, if you have a policy that's going to expire close to or near your new closing date, then they
Exactly.
will ask for the premium to be paid.
Exactly.
But if it's just been
Mhm.
paid months ago, they're going to just make sure you have that coverage to be able to secure if something happens to the home.
That's great. That's great. I do have a question while we're talking about insurance, and I've seen this scenario. And you look, I'm always open to learn something new in this industry. Um, when when is a client or a buyer eligible to pay for their insurance outside of closing upfront, and when is it required that they show it on the settlement statement? Because I've seen both, and I didn't know why that was. Maybe both of you could tackle that.
Yeah.
Well,
So go ahead, Chris.
well, from my standpoint, is based on what the mortgage company says, because
Oh,
some mortgage companies, most of them want to get that first year under their belt where they pay for it, and some of them want to be on hook for a few years. But some mortgage companies say, hey, you pay that first year, then if you want to go, don't want to escrow anymore and want to do it on your own, then you're able to do that at that particular time. But I always tell my customers, you need to check with the mortgage companies. They're going to be the ones who are going to dictate which direction you go from that
Right,
standpoint.
right, right.
And
mhm.
I'm
And
about to, I'm sorry, go ahead.
no, no, go ahead. No, no. I'm gonna remember what I was gonna say.
Okay.
That's
What I
okay.
was going to
I know
say
I'm
too,
old.
when
Me
it comes to
too.
insurance, it's insurance. Home insurance is not like other insurance. Some people think I'm gonna pay my own insurance. You don't really save any money per se by because the insurance price is the insurance price. From an insurance standpoint, it's not like your PMI insurance or some other stuff where you pay it yourself. You might can save a percentage or something from that standpoint. When home insurance, the price is the price, and I think we talked about this on several occasions. I know Rhonda said she does her own thing and she's good about that, but you have a lot of people. I tell them you need to escrow because once you screw up on your home, you can just go on a serious tailspin, from that standpoint. So I always suggest most of my customers escrow because they know that payment's coming out. And when the pandemic hit, we talked about this before as well. When the pandemic hit, some of those people who weren't escrowing, then they kind of let their payments go by the wayside, and then they were in a financial quandary from that standpoint. So if you escrow, it's already taken out, so you don't have to worry about it. So you're somebody who's diligent and know you can take care of your bills no matter what happens. Do it, but if not, you better be like me. You better escrow.
Mhm. Yeah, and I'm going to piggyback off of that. Usually, our GSEs, which is our FHA, USDA, and VA, they require you, especially FHA, they require you to escrow. So you don't have the option to pay it because
Mhm.
escrow is required. So you won't have an option to be able to pay it yourself. It has to be escrowed into your monthly payment.
Okay, so then it would probably be a conventional loan where it is optional.
Hmm.
Ah, see, learned something. I didn't know it was mandatory with
Yeah,
FHA.
escrow is mandatory for FHA.
Okay, awesome, awesome. Hey, what else are y'all seeing out there?
Well, I got a question for you, Ross. You were talking about the home builders, and of course, they want to turn no bonuses or money like that. But do you think some of those companies are gonna get some backlash because they were kind of being a little, as they say, being a little stank for a while with those realtors. So, do
Well,
you think they're
not
gonna catch some backlash because of that?
well. I think if they step in position and do the right thing by realtors who have worked extremely hard in this
Mhm.
season because of the type of market we in, just come alongside us again. That's what I'm saying. And do the right thing. Be good. And there are a few builders who have decided that we're not worthy of, we won't say what's the set commission, but it's an implied commission rate because it's been kind of the standard. But please know, disclaimer, I didn't say that, our commission was set. But there are some builders who have really taken away 2/3 of our commission.
Oh
Um,
wow.
yes.
Yeah, and I've
And
actually. Oh, I'm sorry. I'm sorry. I
no,
got a
no,
whole
no.
lot to say today, don't I?
No, please jump right in. And I am looking for that to be overturned. I really am. But for us who have integrity and really want to see the best interests of our clients, we don't hold anything back. We don't hold anything back. We show our clients those homes, even though those companies have slighted us and taken away our commission.
Right, right. And
So
I think that there was bridges that were burned when they took away the commission. And I know there were several realtors who say, well, that relationship that I did have them, if they don't feel I'm worthy when the market turns and they need me, It's not that I'm going to deny my customer if that's who they want to choose as their builder, but I'm not going to be their cheerleader either. So
Yeah.
I think they did burn some bridges with some of the realtors during that time when they did
Yeah.
take commission. But when you got to eat, you surely change your mind, won't you?
But and when it turns out we're eating from the same table,
Yeah.
it's like, okay, give me
Hmm.
some. Okay.
Yeah.
And Ross, I'm gonna
Exactly.
circle. I'm gonna circle back to you about you said the prices of the homes going down.
Yeah.
So, well, what percentage are they going down uh,
I'm
that you've been
seeing
seeing?
I'm seeing 3 to 5%.
Okay.
3 to 5%. That's about an average. I wouldn't say across the board, but every week for the past 4 weeks, I've seen more and more and more happen. Now, what sellers have to realize is that even when their great, awesome listing agent sits down with them, gives them the comparable history in the neighborhood, the broker's opinion of value. If they choose to supersede and want to still overprice their home, a couple of things they're setting themselves up for, especially in this market. If you're in that higher tier, and I'm talking about 700, 750,000 and above,
Mhm.
chances is that your home is going to stay on the market longer because you lose a part of the pot in the number of people that are looking in that price range as the price range goes up. I did say, I heard the question, but you said we were in a seller's market. In a certain price range, yes. But as you get higher and higher in sales price, the pool of those buyers who are qualified to
Complex.
purchase those properties, it shrinks. So, and I do understand that even though Texas is a leader in job creation, there are some companies who have responded to this inflation, and getting ready to brace for a fall. Some people are cutting back, having freezes on some positions, and so there are people who are kind of in undecided, I should say, at that top tier because they don't want to be stuck with a home that price and possibly have no job. So I mean, it's a lot to consider. And the question people ask me, well, you're a broker, you're a real estate professional. Is this the right time to buy? Now, I'm not going to answer that right now. I want to punt that question to both of you. I want your
Mhm.
earnest opinion. What would you tell someone?
Uh, hey, Chris got a lot of noise in the background. I
I'm
can't.
muted.
I didn't hear your question. I apologize.
No, my question was, in light of everything that's happening right now, if someone were to ask you your professional opinion, is this a right time to buy? Is this a good time to buy? Is this a good season to buy? What would you tell them?
I would say absolutely, because you want to know what? It is the right time to buy. Because let me just tell you, if you're renting or leasing, your interest rate is already 100% because you're paying. So you're it's
Why would you
already,
do that?
yeah, it's already 100%. So what's interest rates going up to 6? Hey, we remember what not too long ago they were in the eights, nines, and people were
Repost.
still purchasing.
I am reposting that.
Yeah, so now is the time to buy. Yes, because we don't, and I know everyone is waiting for that market to crash. In my opinion, and based on my knowledge, uh, we're not going to see that. We're not going to see. Now we must say that anytime there's an inflation, it has to come down, but we don't know that timeline. Will they come down to be where they were before? Don't forget, we're in a pandemic. Interest rates were low based on the pandemic and trying to keep the economy going. I don't see interest rates coming back that low unless we have something like that again. And God, please, no,
Right,
So
right.
I'm saying that
That's
they
good,
may come
Rhonda.
down, ma'am.
That's good. That's
Yeah,
good. That's good
yeah,
And
info.
see, I agree with what Rhonda's saying as well, because the thing is, like I tell people, cash is king. And if you have money, there have been some concerns that people thought maybe we might be going into a recession. And once again, is it a good time to buy? If you have the money, that's the time to clean up the recession. Because if you have the money, like I said, stuff prices go down, and you can get better, potentially better rates on some things, and then housing goes down, and then you don't have as much competition. So if you got money, I probably don't have a recession or anything like that. But if we do, if you have money, that's the perfect time to buy a house, because the thing is, see, it might go down 3 to 5%. It might go down another 15 to 20. If you have the cash, you can go in and swoop something up real quick, and have a good financial gain.
and,
Well,
and
I know, and this is a disclaimer. None of us are financial advisors. Please
No.
go hire one. But let's talk about that. You said cash is king. I say it's queen. It's royalty. Yes, money talks, walks, all of that. So, in these times, do you think people are a little bit more leery about spending in
I
terms
don't
of
think.
an investment, like such as a house? Do you think they're more hesitant because they're afraid that it'll be a surmounting bill, something that they cannot afford?
Well, like I just said a few minutes ago, I'm gonna kind of repeat what I said. If you got the money, they're not being hesitant. If you got the money, this is the perfect time to do those things you're trying to do from a financial standpoint. Now, if you're on the fence before all this what happened, then you might want to be more leery, be more cautious from that standpoint. But if you got the money, this is the perfect time to go ahead and make those purchases and do the things you're trying to do.
yeah.
Mhm.
And I always say that what goes up must come down. And
Yeah,
so if you're at a point where the interest rate, you feel like the interest rate is beyond what you desire, then when the interest rate comes back down, if it does, then refinance. But if you're leasing and you're renting, then you're still throwing money out the door.
out the
And
door.
yeah, you're
Mhm.
still throwing money out the door. So why not just invest in yourself? Get rid of some of those bills that you don't need, like those credit cards and those things that are holding you back from keeping money in your pocket and be able to purchase to
Mhm.
start with. So get rid of those debts. Work to get those rid of those debts saved. And then yes, purchase your home so that may be your main debt. You may have that in a car and maybe just one credit card, or you don't even have to have a car, but just have that, and then you'll be okay. Because when you're throwing money down the drain, you never get that back. At least if you're invested in a home, it's a return on your home. It's the best investment that you can have.
So one of the questions that I've been asked by a couple of homeowners who've reached out recently is, "Hey, is this a good time to sell? What do you think my chances would be selling next year versus this year?" Now, do I think we're going to continue to reap double digit ROI on the market value increase? No, I
I agree.
don't.
I agree.
Yes. Do I think we're going to dip substantially? Not substantially, but you have to remember years ago, before we started this mission, this lightning bolt of market value increase, it's unprecedented what has happened in the past 5 years with the market value increasing 78% cumulative over 5 years in DFW. I mean,
Mm-hmm.
my goodness. I mean, when you take the average of 5 years, 578 divided by 5, what is that? That's double digits.
Mm-hmm.
And no, I think we're at an altitude where we're gonna be coasting.
Mm-hmm.
We may see a little bit of dip, but we're not going to crash. Can I
Mm-hmm.
write a check on that? No, because I don't know if we. I just can't say, and I don't want to speak a catastrophe on it, but
Right.
I cannot say.
I
But
thought Ross was going to pull out that crystal ball for a minute.
no, I don't do that. But
Mm-hmm.
anyway,
Yeah.
but no, I feel that we are at the peak of the acceleration based on where we've been the last 3 years. I
Mm-hmm.
will say that.
Yeah.
If
I,
you are if you are going to sell, now's the time to do it. Okay,
mm-hmm.
and I keep hearing these questions, but where am I going? No, you will not get the deal that you had 10, 15, 20 years ago. It does not exist. It's a figment of your imagination. But let me tell you what you can do, just like Rhonda and Chris have been saying. This is an opportunity for what? To get out of debt.
Mm-hmm.
An opportunity not necessarily to upsize, but maybe you've been in your home 20 years, 15 years, more than 10 years, and nobody's home anymore.
Mm-hmm.
Nobody, and
Kids are
because
gone. Kids are
kids
gone.
are gone and people are not coming over as much because look, there's not any huge gatherings like there used to be. So what do you really need all of that room for? Right? You're paying all of this in lawn maintenance. You're paying all of the paying the house cleaner, whatever the case may be. Why not right size or downsize? Pay some bills off. Make some smart investments
Mm-hmm.
to have your equity make money. Like your money having babies, your money making money. So that it's just not all tied up in the house. Maybe is this an opportunity for you to go into business? To solve a problem, to provide an answer and get paid for it, right? Well, you can do
Right.
that from your home equity. So just some alternatives to think about and really use the home as an asset. Rhonda, what do you have?
Well, I was just thinking about it. I know we talk about the seller and but I want to just piggyback or go back around to the buyer because in this industry, I think we also have a responsibility as lenders to make sure that our buyers don't just fall by the wayside. And one of the things I know, and when I guess before I became in this industry, that they had 40-year terms, and I would really
Mm,
like to see that come back so that we will allow the prospective home buyers to be able to qualify not based on a 15, 20, or 30-year term, but allow them to qualify on a 40-year term, which is going to give you a less um,
mhm.
monthly payment. I'm sorry.
Mhm.
Uh-huh.
Okay, Rhonda, I need you to debunk the fallacy or tell the truth or do both. I know you're going to do both. So I hear the question, why in the world would I want a 40-year mortgage when the world tells us and the consensus tells us, oh, get a 20-year mortgage. If you can, get a 15-year mortgage. What's the difference between those and why do people do that?
Well, what they say is they think this is what they're thinking. Oh my goodness, that means that I have 30 years to pay for this house, and that's it. I qualified, I purchased, it's 30 years, it's over and done with. I don't want to be stuck with a mortgage for 30 years, but let's think about it. If you do the 40 years, it's going to get, like you said, it's going to stretch out the monthly payment. You're probably going to see a $500 difference. Let's just say that, or maybe let's say $400 to $500 difference. So you have the opportunity to refinance just because you start off with a 40-year, the economy changed, the market changed, refinance, get a 30, get a 20, get a 15-year. And it doesn't, and then also don't forget just because you have a 40-year doesn't mean you can't pay on your principal. That doesn't mean just because it's a 40-year is set in stone. You can make extra payments, you can reduce your terms, your length of time to purchase that home. And then who says you're going to be in that home for 30 years? You may decide to move in 10 years. So don't let that stop you. I think it's a mindset for when our family, we can just say our ancestors before us, that you get into this home and you don't move. You don't buy you another home. You stay there till all the kids grown. Once the kids grown, you stay there and you just pass it on to the children. Okay, but that's not that's not necessarily how it is now. So
Mhm.
don't let a longer term discourage you. Listen, just like a car, they used to have where you can only purchase a car in 4 years, then they changed it to five, didn't they? And now
Mhm.
it's seven. And you never
Oh,
thought that was
wow.
going to, yeah, now you can do it in 7 years. But it reduces the monthly payment. But it does
Right.
not lock you into having to pay it for 7 years.
I
That
like
means when times get rough, your monthly payment is less. You can pay that monthly payment and you're not delinquent or behind because it's lower. But if you want to add an extra payment, you can do that as well.
It's Ron's. I ask my customers that 'cause I do a lot of refinances and stuff like that, and kind of alluding to what Rhonda just said. People refinance for different reasons. Like she said, you can pay more, but I have some customers who have refinanced too because depends on where you are in life too. Whether you're younger, you're older, and I see more and more people who are older, start to refinance because the thing is they know they are on the downside of their careers. So i.e., what I did with Rhonda myself, we were like, hey, we're gonna go ahead and refinance. So we said our goal is to try to pay off our house within the next 5 to 7 years because I'm looking to retire here in the next 5 to 7. So life situations dictate where you are and what you're trying to do. And then two,
True.
depends on how
Absolutely.
long you're gonna try to be in that house as well. It's also
Mm-hmm.
it's a need sometimes potentially we're not financing, you only paying on being there for 3 or 4 years, potentially. It just depends on what you're trying to do. But it depends on what your life situation is and what you're trying to do and what goals you're trying to meet that might dictate, how you why if you're going to refinance.
Mm-hmm.
Mhm. Hey, Chris, got an insurance question about terms of loan 15, 20, 30, 40. Is the insurance premium different based on the term?
Oh yeah,
Or is
most
it-
definitely.
Oh,
Yeah.
really?
hmm It
Well,
depends
talk
on
about
like anything else depends, like you said, it depends on how long it's going to be or how short it's going to be. Determines on how much it's going to be from that standpoint. Of course, naturally, the longer it is, it's going to probably be usually going to be less expensive. If it's a shorter time frame, you talking about 15 years opposed to like say 35 or 40. Most people insurance companies is 15 to 30 usually, but you do see 35 and 40-year terms out there as well. And once again, like I said, too, is depending on what you're trying to do. Um, I always tell people to do a minimum. Usually, I suggest people do maybe like 30 years because again, 30 years goes by quicker than you think.
Yeah.
Some people, you know, some people say I'm going to do a 15 year. Let me back up. 15 years comes quicker than you think, and it rolls up you so fast that you're like, oh wow, it's that time. I said if you do like a 30, it kind of gives you time to do different things. And then over the course of time, like I said, with term insurance, you've heard me say this before. Some people say term is like renting a house and whole life, universal life is like buying a house. I don't like that analogy. Like I said, my analogy is term is like leasing to buy because you have some potential to where you can convert that over to a whole life or universal life product. And then the reason I suggest that as well, depending on where your financial situation is, term is cheaper over time you can convert some of that term over to whole life and universal life. So if you have a $300,000 policy, you might can do like 50 over. When that time comes, you might want to convert 50,000 of it over and still have 250 left in your term. So it's something that you can play with. It gives you a little bit of time to kind of maneuver and do some things.
So I hope I asked the right question. So based on the term of the loan, the insurance rate could be different. Is that correct?
Well, you should. It's not necessarily a loan per se, but from the standpoint of it depends on how long you get it for. It does gonna make a difference in the premium.
Okay. Good deal.
See, I learned something new. I didn't know that.
Yeah.
We
Cheers.
always learn something new, right?
We always do. We always do.
Yeah. But
But,
I guess go ahead, Chris.
once again, kind of going to, like we was talking about wealth building and things of that nature too. That's another reason, to get life insurance. And like I said, one of the things I don't want to say drives me nuts, but it kind of does. It's like you said, when somebody passes or something like that, and people, be struggling to do all these GoFundmes and things of that nature, where they would
Mm,
pay for, you know, somewhat of an
mhm,
inexpensive policy for a burial, then you probably still have some money left over. But if you just actually get a decent sized term policy, not only are you going to be able to bury that person, sometimes my other counterparts from other, if you catch my drift,
mhm,
they capitalize on that, and then they can use the old slang term, stack their chips, and use that money, to catapult to do other things as well, in the future. So try to
mhm,
we should try to set ourselves up for a better situation. And that's one thing we need to do. And that's one of the reasons we have this show, so we can
mhm,
talk
mhm.
and educate and instruct people,
Wow.
not instruct, but kind of give them options what they can do to potentially better themselves from a financial standpoint.
Which brings up another point. We definitely are needing to have an estate um, planning attorney come and speak with us because I follow one lady in particular. Her name is Esquire Tony Moore Esquire, and she's a wealth building attorney. and she follows some of our superstars, people who have died without a will, people who are failing in their mental health. Wendy Williams, even the what's the gentleman who goodness, he was such an awesome actor. He did a lot of the black movies.
Yeah,
Um,
I know who you're talking about. The one that died of cancer. I can't
yes,
think of his
who is
name
he?
either.
Who is he,
Yeah, I
Chris?
can't think of his
That's
name.
don't say what Bozeman, are you?
Yeah, yeah, yeah.
Yeah,
Bozeman.
thank you,
Mhm.
thank you.
Mhm.
His estate has just been settled, and it was split up, but the fact is he didn't have estate planning in place, and so it just was a grueling process. And people like Prince, I love Purple Rain and Prince, telling my age, but he didn't even die with a will. So
James
we
Brown.
wow, James Brown,
You said
goodness.
who?
James Brown.
James
You
Oh, I
Brown.
thought
know,
you said Chris Brown.
no, no, James Brown. James. When he
Yes.
passed, remember what
Yeah, that's
happened?
true.
They didn't bury
Yeah.
his body for a while. I think they kind of had him on ice for a little bit so they can get everything sorted out.
And
Wow.
Aretha Franklin.
Yep,
You
yep.
remember
Wow.
Aretha Franklin? Yeah, and we didn't know. Yeah,
Yeah, what's up with that? What is that?
I don't know. I wish I had the answer to that, but I just don't know. I don't know if just too busy or just didn't want to someone else,
In
you
their
know,
business,
yeah,
maybe?
in their business. Yeah, and that's it's crazy, but there is.
But at the end of the day, indecision like that, y'all, it hurts. It hurts our families. So
Yeah,
I definitely want to have us bring an estate attorney on real
that
soon and talk
that
about
that
that.
sounds that sounds good. But listen, I want to share something. I know we're talking about news and updates, but I want to share something really I think it's exciting because
Yes.
being a lender, I deal with the credit reports and what's going on credit wise and whether or not you can qualify based on your credit score and what you have out there in collections. But it is exciting that on effective July the 1st, this like you say, this couple that um, the any collection account that has been paid. Now that means zero balance. That doesn't mean collection accounts that are still on there with balances will be removed from the credit reports. Okay. Yes.
Huge.
Yes, that
Wow.
that is very huge.
Woo.
And then also the credit bureaus, which is the Equifax, Experian, and Equifax and TransUnion. If you have a collection a collection that is reported to the credit bureau, they won't report it immediately. They'll give you up to 1 year to resolve, work it out with the credit, the hospital, the medical bill, work it out before it's reported on your
One
credit report.
year.
Yeah, they give you 1 year to resolve. Once that 1 year is up, it is reported. And then they're talking about in 2023, which is next year, that anything that's less than $500 will not be reported on the
Will
credit
not
bureau.
even be reported at
Not even
all.
be reported
Oh
at
wow.
all.
Okay.
Yeah.
So
So I think that's really exciting.
that's breaking news. Now
Hmm.
let's clarify. Again, we're all learning. So medical bills do affect your credit score, but they don't impact your debt to income ratio for qualifying.
That is 100% correct. That means that when you
Wow.
have a medical bill that's on your credit report, they are excluded from your debt to income ratio.
You know what? I see about 25% of the people who have been holding back on mortgages just say, oh, I need to apply with Rhonda.
Yeah, you know what? I heard that too.
I
But
get
but don't forget, it does impact your credit score. So
you.
that can eliminate you up front without even moving forward with the loan, especially if you fall below a qualifying credit score. So it's best, number one, not to have those collections. But this is the great thing about it, is that if they give you now a year to resolve before it's reported, that's huge. That
That's
is significant
huge.
huge.
That
because
is
the medical
crazy.
bills that are zero, they're gonna, removing those. They're already zero, so they've probably done their job and not affecting your credit report. But I think it's grand that they're allowing you time to resolve even dispute, because there's a lot of medical bills that are disputed because they said my insurance was supposed to pay for it, or I wasn't responsible for that bill. So it's great that they're giving you a year to resolve it, clear it before it's even
Mhm.
reported.
Mm-hmm, mm-hmm. Rhonda, I hope this is not throwing you off guard. But what's happening or what's new in the world of VA, our veterans, anything out there, and USDA? Anything
Yeah,
to?
but do you know what? USDA, I don't do, I'm going to just say USDA is a hard pill. I'm going to tell you
Mm,
why. And not that it's a hard pill. Let me just discourage you. Please, if you are going for a rural area, you have USDA, it's an awesome product. The debt to income ratio is sometimes a little challenging because it's lower than you conventional. So you have to
wow.
have your debt in order with the USDA. But
Okay.
if you do have that, then you're grand. With US VA, of course, it's a little different. It's
Mhm.
based on DU. You run DU, which is a direct desktop underwriter, just like you do any. They give you approval, you're good.
Mhm.
But on VA, I am seeing a little less VA now, and I think that's because of the market.
Yeah.
That's because of the market, and what's key now is what cash and
Yeah.
conventional is key right
Cash and
now.
conventional.
But I do see that switching because you're going to have a little less a
Mm-hmm.
competition
Hmm.
now, and it may come back where FHA and VA will still be in the running. But
Right.
we do know
Right.
based on the market. But
Yeah.
USDA, I don't see a whole lot because of the debt to income
Mm-hmm.
ratio. But VA and FHA, I feel like I'll make a comeback. But right now, based on the market, they're a little bit at the bottom.
Okay, I get that, and I do see that. A couple things, I did write an ebook last fall, summer actually, on the 22 strategies how to win the bidding war and purchase the home you want. And when homeowners are educated about the different types of loans, they understand that VA and FHA, in terms of the appraisals, are going to be a little bit more stringent. And
Mhm.
if those offers or offers that come in with buyers who have VA or FHA financing over conventional, well, we know on a conventional loan, we're able to add the appraisal waiver,
Mhm.
whereas on the FHA and VA, not so much because, and Rhonda, you can explain why that a mandatory clause is there and what that means. But basically, if you're a conventional borrower, you have the leeway if you have that extra cash to bring to the
Mhm.
table if the home doesn't appraise. If you want to bring it to the table, you can, right?
Mhm.
So, Rhonda,
Mhm.
would you interject just a bit and explain?
Yeah, when we come to FHA and VA, their appraisal guidelines are a lot stricter. For instance, and Ross, you can attest to this. If you have a window seal with wood coming
Yeah,
out around it, they
peeling,
will not.
painting,
Yeah,
yeah, peeling,
things
chips,
that are
paint.
minor.
Yeah.
Yes. And they're not going to allow you to overlook those things. With FHA and VA, very strict. Those things have to be repaired and they're part of the subject to appraisal. That means they have to be fixed or repaired before that home is what we call as is instead of subject to.
Mm-hmm.
Okay? And so when you do a waiver, that means that nope, we can't come in. We're not gonna. We don't even care what the house looked like. We're gonna make sure that we want it, and there's not an appraisal. With FHA, you don't have that option
You don't have that
because
option.
of the strict rules and
Right.
regulations when it comes to government loan.
Now, Ron, I have a question about USDA. Now, some of these new upcoming areas like Aubrey, Pilot Point, even some parts of Lillian, I think I see some people coming through with USDA in those areas because of those developing areas. I see more USDA coming through for that. You said rural, but that considered rural because it's still
Yes,
developing.
yes, certain part of, and you can, I think you can go to USDA.gov and you can actually put in the address
There's
and
a
then tell you
map.
whether or not you're in the USDA
Mhm.
area. Yes, and those areas are areas that are being developed. They want to make sure that the metropolitan grows and that they're putting their money into those areas to be able to grow them. So they are offering that incentive as a USDA to get into that area to grow. And of course, when you've got more people, there's more money in taxes. And so they're trying to get those areas to grow. But like I
Absolutely.
said, with USDA, it is just a little tighter on the debt to income ratio. And you have to make sure that your debt to income is low.
And you said something that piqued my interest as well. Just now you said money and taxes. Now, do you think we're going to see a reduction in these property taxes and stuff like that? Because you said it's going down 3 to 5%, or you think they're going to try to hold on for that for a while?
They're gonna try to hold on as much money as they can, unless you're gonna protest. I think now that's my opinion. I'm not a tax expert, but they're not gonna give that money back to you unless you go out there and protest and say, no, you want to know
Protest.
what, this is not correct. So
Homeowners.
you're right, protest.
Yes.
If you feel like,
Protest every year.
yeah,
Just because. Protest. Nothing
yeah,
happens. Squeaky wheel is the one that gets the attention. So
yes,
protesting.
exactly. So it's not going to be an automatic thing, Chris. That's my opinion now. Like I say, I'm not a tax attorney or tax expert or one that makes the decisions, but I don't see it happening.
Yeah. Hey, Rhonda, to kind of piggyback off of what you and Chris were talking about, the USDA rule, what we are seeing though is, more affordable new construction is being built and constructed in more rural areas.
Your
So your
area.
your,
Hmm.
your commute, if you're coming into work, it could be 45 minutes minimum, 1 hour, 1.5 hours, depending on traffic. But that's where you're going to find prices lower. But what we are finding in some of those areas that are new and developing, they will be assessed in either a pit or a mud. Okay.
Hmm.
So, and that's an additional assessment for those developers bringing utilities, infrastructure, and all of those things into the neighborhood. So,
Right.
whereas you would have talked to Rhonda and gotten approved based on a specific tax rate, maybe an average, well, maybe she got you approved on a house that you were really interested in, and maybe that tax rate was 2.3. But you went
Hmm.
and got and found a house in a pit or mud, but that tax rate was 2.2. But by the time they assessed the mud tax, it was 2.7. And if you
Hmm.
were already at a high debt to income ratio, that may have put you over. So definitely, but before you go shopping in different counties and areas, check with your lender, check with Rhonda, to make sure that that house or that tax rate, and check with your realtor. They can help
Hmm.
you as well.
And
Make
insurance agent.
make sure that
Hmm.
tax rate won't throw you
Yeah,
overboard.
right. And that's one of the things I do. When I give a pre-approval, I leave just a little bit of room for
Oh,
whatever
good.
that made the unknown, because
Good,
in
good.
most of the time the unknown is taxes and insurance, because your principal interest is kind of stable when you, but what can change your monthly payment, which is going to affect your debt to income ratio. It's going to
Yep.
be your taxes
Mhm,
and
mhm.
your insurance. So you never want a lender to approve you to the bit, like you don't have a sneeze to go. You want just a little room for
Like
for
that.
those unknowns. And if you
Yeah.
are approved and you do have a property that's going to be a like you said, a pit or mud, to make sure that you get back with your lender and ask them to rerun numbers, refigure to put that assessment into your debt to income, because it does have to be counted in your
Yeah.
debt to income before you actually write that contract. Or if you write that contract and your realtor partner did not consult with your lender, that you have that option period that you can say, okay, I'm not going to be able to make it. I can back out of this contract.
Well,
Yeah.
guys, I hate to kind of cut everybody off, but we're up against that window. It's time to do that round robin, and we got about
Yes.
less than
Oh,
Yes.
less than a minute.
wait. Is
Yeah,
it
we were
good?
about to
That's
do
what.
that. Yes, we're about to. Hey, I'm Rosby, Ask Rosby, Principal Broker, CEO of Arbrook Realty, and Director of Arbrook Cares, our nonprofit. Both of them work together to help renters to become homeowners. This is not just a job, it's a career, it's a lifestyle, it's a ministry. If we can be of assistance to you, call us at 972 996 4702. Rhonda.
Okay, and I'm Rhonda Hutchison. I'm the Lone Lioness. I'm a residential mortgage lender. I know we talked about a lot today, but if you have any additional questions or just need clarification on anything that we discussed on today, give me a call at 214-856-3747. Chris?
And I'm always the forgotten child of insurance, the forgotten child in this whole process. We're talking about debt to income ratio. Sometimes we're the ones who are going to kind of get you over that hump a lot of times. But
That's true.
with
That's
that
true.
being said, no, don't hesitate to call me so I can have a consultation with you so we can discuss these things. And you can reach me at 214-870-4269. And I had a wonderful time with these ladies once again. And we look forward to seeing you guys in a couple of weeks.
Yes.
That's awesome. Now, remember, we're here every second and fourth Tuesday, high noon, 12 noon Central Standard Time for an hour of power. Here, elevating, educating, and empowering you. So that's all we have time for. We want to thank Ms. Laura Washington, our president of NAREB, for allowing us to be here on this platform. And we will see you next time. Bye bye.
All right. Be blessed.